Everyone. Welcome to this webinar today. We'll be starting in about 1 minute because we're doing a live stream on social media, and hopefully we will be connected there very soon. My indicator indicates that we are there now, so welcome to everyone. I hope that you enjoy this webinar, where we're going to be looking at charge out rates for tradies. I'm Peter Towers, Managing Director of ESS BIZTOOls. I hope that you're having a wonderful day. What are your tradie clients' goals and dreams? Have you asked them? Do you understand what they are? I think this should be a prerequisite for every accounting firm's assignment with a client. What do they want to achieve from their business? So how can you help tradie clients to generate sufficient sales to achieve their profit target? Because it's all about sales, isn't it? Unless we make sales, we are probably not going to achieve the gross profit, let alone the net profit that's been targeted within this particular business. So let's go back to the beginning and understand something about the business. What type of business is it? If it's a tradie, is it a carpenter or electrician, a plumber or a tiler or what have you? How many people work in the team? What classifications does your client have of team members? By that I mean manager, foreman, leading hand, tradies, work assistants, apprentices, and there could be more. How many of these people are permanent full-time employees? And does your client have some permanent part-time employees? And casual employees? How many apprentices are there? What training time do the apprentices require during the year? What's the annual gross hours that each employee will be paid for, or classifications of employees will be paid for? Let's look at permanent full-time and permanent part-time employees. You need to go through to understand the composition of labour on costs, which includes annual leave. Is there any additional annual leave over and above the normal 4 weeks? Is there holiday pay loading being paid to all people or only some of them? Which ones? Is there any change on the statutory holidays that's applicable in your state? What about personal and carers leave? Is it the same as what the government has indicated? Superannuation, is the 10.5% being paid, or is there special arrangements with some team members to be paying 12%, 14%, or whatever? Is payroll tax to be included in the on-cost calculation? Is it applicable for this business? What about training and development time? Is it the same for everyone, or does it vary? If so, you need to dissect those people into separate categories if they have a different type of allocation for training and development. And long service leave, this client going to start long service leave provision, so you're setting up a costing exercise for it and reflecting it in the charge out rate from the commencement of employment, or after a period of time, 4 or 5 years. I favour setting it up from day one for everyone, especially in the charge out rate calculators, because at that stage it is a contingent liability. Casual staff, you normally only have to worry about superannuation and work care, and payroll tax obviously if the business is liable for payroll tax in the state the business is being operated in. So all this leads through to the total labour on costs. ESS BIZTOOLS has developed a tradie charge out rate calculator which will determine the total labour on costs for each employee classification. And in our system, we have provision for 36 classifications in the permanent full-time employee area and 36 in the permanent part-time category area. So I think you've got plenty of space there to record the various variations that occur. Now, employee on cost is a significant cost that many businesses overlook in the determination of charge out rates. I've even noticed some seem to omit superannuation, which is one of the biggest costs of all. So we need to make sure that all of these components of on cost have been included, because this is your one and only opportunity to raise that cost by reflecting it within the labour charge out rate for an individual employee. So once you've determined the on costs, it's then possible to move into a labour budget. Now, the labour budget should be calculated on all team members, including the leadership team and the working owners. You need to insert the individual employee's gross salary and the individual team members' expected percentage on the individual hours that they're going to work. So the chargeable component of the time that they're actually working or available to work. So it's after annual leave's been deducted, allowances for holidays, training, all that's been taken into account in the on-cost determination. The ESS BIZTOOLS tradie charge out rate calculator will transfer information from the labour on-cost calculations into the labour budget, and the calculator will then determine the total chargeable hours target for each employment classification. Now, this is very important because there's variations in all these steps. That's why we've got 36 categories, or allowance for 36 categories in the permanent employees full-time and the permanent part-time employees, 72 in total. Now, I don't expect anyone to use all them, but some people go fairly close, I'm told, because of variations in those various components. Because we want to get this on cost fairly accurate, because it's got this important bearing in the labour charge out rate. The targeted business productivity percentage will be determined. So this is the overall percentage. So if you've got a situation where you're paying for 10,000 hours and it's expected that 7,000 hours are going to be able to be charged to clients, so you've got a productivity of 70%. You're able then to do some comparison to benchmark that performance against others in your client's industry category. If you found that others are running at 80%, you might suggest the client starts making some inquiries to try to find out why and look at it in more detail. So use the industry benchmarks to compare. Return on investment. What's the net investment in the business? Ask your client. You might say it's $200,000. What rate of return would the client like to achieve? Because of the risks and other factors involved in owning a business, probably 20%. So that would mean that the targeted profit was going to be $40,000. Now, if the client doesn't want to go through the process of what the net investment is, etc., but he says, I'd like to make $50,000 profit, we'll just enter $50,000 into the calculator in the area which says calculated targeted profit. And the calculation will then be done. The budgeted overhead expenses are very important. They may have already been estimated in the annual budget. That's all right. We're now trying to work out the charge out rates, because when a lot of people do annual budgets, they basically selected a sales figure and put that into the budget without much thought as to how that sales figure is going to be determined. And I'm working through now what's part of the determination. Obviously, already we have labour on cost. We've got the cost of the labour for all people, including the working owners. And now we've got overhead expenses, which also have to be included. Just as a reminder, don't include labour on costs in the overhead expenses, because we've already included them as part of the original calculation for the labour on costs. Next item we want to talk about is materials markup. Most tradies purchase materials, products, furniture, fittings, light fittings for the client. They get from the client indications as to what they would like to be put into the house or the building or whatever is being built. They normally organise to buy it. So someone goes through the catalogues, finds the products, makes the phone call or sends an email or does some sort of message to the supplier and purchases and pays for it on the tradie's credit card or bank account or whatever. So the tradie goes to some time is spent in ordering these things. So it's normal to mark those purchases up by 10, 15, 20, 30% to cover the services that the tradie has supplied to the end client. It's also necessary for the tradie to estimate what amount of money he or she is going to spend during the year on buying these external purchases. It might be 500,000, might be $1 million, might be $3 million. So that the calculation of the markup can then be affected. 15%, is it going to be levied on all clients? If it's not, you need to reduce the 15%, because if it's not going to be levied across the total, it's not going to be an accurate figure. Now, does your client want to treat the materials markup as a separate stickable profit generator? In other words, if the amount of purchases is $1 million and the markup is 10%, the calculation is therefore $100,000. Is that going to be, in effect, a separate line in the calculation of the charge out rate? So it's a separate income item? Or are you going to, does the client want to use that as a credit in determining the labour cost? So you've got all your costs that you're going to recover as a labour cost charge out rate. Are you going to credit $100,000 off that figure? There's different viewpoints on that. I know some tradies like keeping that super profit, they call it, on their markups for them. But others know that in the marketplace situation, the competitive situation that they have with their competitors, they probably need to process it as a credit in the determination of the level of the labour cost to be recovered in the charge out rate calculator. Another interesting question is write-ups and write-downs. Now, I have particularly liked the concept that in a budget you're putting in write-downs. Write-ups might be all right, but some people still do it. And you need to know whether that's got to be incorporated into the calculations, that write-up or write-down. So then we get to determining the targeted income from the sale of labour. What is the total of the labour costs, including the labour on costs? what's the targeted profit? I think we established before $40,000. So the total of the labour costs may in fact be $1 million. The on cost might be running at $150,000, and we say the profit is $40,000. So at that stage, we're building up to $1,190,000. If the markup's included in that calculation, so we got a total there $1,190,000. If there's an allowance for write down or write up, incorporate that into the adjustment. The end amount is the amount of gross value of labour in this calculation, $1,190,000, that needs to be recovered during the year. Although I forgot to put in there the overheads, I think. So obviously overhead expenses would probably go into there. So if we had $500,000 of those, we'd be looking at $1,690,000. Determination of the charge out rate for each individual person then needs to be done. And the tradie charge out rate calculator we've developed calculates the base cost of chargeable hours and a business overhead factor. And that's all performed within the software package that our subscribers receive. The system then determines the individual charge out rates for each individual person. This is done by the calculation of the charge out rate and multiplied by the base cost per hour by the business overhead factor. So those calculations just go ahead in the background in the system, and what you then have is the charge out rates for each individual person. You can prove that by multiplying the charge out rates by the chargeable hours for that person to determine the targeted income to be generated by each team member. And the total of this calculation should equal the gross value of the labour revenue for the business. You're then able to calculate the budgeted profitability for the business. We're going to have the sales value of materials purchased for clients, including the markup they're placed onto those goods, the value of sale labour, less allowances, if any, for write-offs, and that will give the total sales income for the business for 12 months. The budgeted profitability of the tradie business can be summarised. Then there's less cost of sales, which is the cost of the materials purchased for clients, and the labour and labour on costs, and that will give you the total cost of sales. You deduct that from the sales figure, you've got gross profit, you can calculate the gross profit percentage. It should be compared on benchmarks to other similar businesses. And then you can deduct the overhead expenses, so you've got a forecast net profit. And this should be same as the targeted net profit determined for the business, which we said originally would be $40,000. So you can analyse the whole picture that's going to happen. You've got certain labour costs and labour on costs, you've got overhead costs, you've got the determination of what you're going to do with the markup on external purchases. You've got the purchase of those goods, but you've then on-sold them and made the markup figure. And the bottom line should be the profit, which should come back to what the original target was, $40,000. So then we might move on to the implementation of a system of financial efficiency for a tradie business. I think that this charge out rate calculation should be prepared at least once a year for your tradie business clients. But a new calculation should be prepared whenever there are significant changes. Now, these might occur in any of the components of the labour on-cost calculator, annual work hours, training hours, gross salary, targeted productivity percentage for individuals, budgeted overhead expenses. Quantity of materials being purchased for clients, the markup percentage that's being used. Any change made in the treatment of the markup percentage, and a change in the expectation or the policy relating to write-ups and write-downs. An interesting job that I think should be introduced for tradies is a weekly performance report. Big companies run weekly reports on virtually every activity they've got. Why don't a lot of small businesses? Individual total working hours charged to jobs would be one of the key items that's going into the KPI report each week. And the individual productivity percentage achieved for each team member. And what you're looking for is variations. Team member number 2 was budgeted to achieve a productivity percentage of 75% and only achieved 60%. Why? There might be a logical explanation. He or she may have been allocated to assist with helping apprentices for the week, and that, or a couple of days, and that's dragged down the productivity percentage. And then you can calculate the labour charge out figure for the week, so you can do a profitability report. And the benefit of all this is it's really giving the person who's responsible for this operation some real-time data, so they can have a good close look. You can calculate the markups of materials invoiced for that week and apply that income figure into the profit and loss account, which you should then be able to prepare. And you can prepare the weekly performance key indicator report for the week. We envisage that your role is to establish this system and to train the client's clerical team how to prepare it. Not necessarily that you're going to be preparing it each week with your team. And then we move into monthly reports. I think it's essential there's monthly profit and loss account report for each individual business units. If you've established you've got 7 of them, you need 7 P&L accounts and comparisons to budget and key performance indicators summary for that month as compared to previous months and compared to budget. In looking at some of the issues that you would be looking at, the review of the cash flow position, particularly looking at debtors. What's the level of debtors? Have the debtor statements gone out within 24 hours of the end of the month? Has someone been on the phone following up anyone that hasn't paid in the last month? What's the debtors days outstanding? If it's over 40 days, what's been done to try to reduce it? What's the creditors level? What's the creditors days outstanding? A lot of people forget this, but in the negotiation of a credit facility, many suppliers will have stipulated your payment terms. And if the payment terms are strictly 30 days and you're running your creditors for that supplier at 38 days, you may run into a problem. Or your client may run into a problem. So it's essential that you're able to communicate that to them. Inventory, what's the level of stock? How's it compared to the budget? Work in progress. Have progress claimed invoices been raised in the last month? If not, why not? Because progress claim invoices should be getting raised continually. The whole idea should be for your client to get rid of something out of work in progress, get it finished, so it can be fully invoiced and paid for. And what's the bank position? Has there been a change? Is there a need for a conversation with the bank? Or have you alerted the client? If you're undertaking a virtual CFO role here, the client hasn't got a person like you in their organisation, then you can prepare an overall financial report, which covers on all of these items, plus others, other things that you've noticed or you want to change. And then you're able to present a report to the business review meeting, which I recommend is held every month. It's the leadership team meeting. And as the accountant or chief financial officer, I think you should attend to present your overall financial report on the operations for the previous month. And out of all this, it may be necessary for a variation to be processed for the charge out rates. Now, this is a great system for tradies, calculating the productivity, the labour, and then determining the appropriate charge out rates, and then in effect auditing those rates by preparing the weekly and then monthly financial accounts, because it's all part of an audit. One of our subscribers has told a interviewer that we had engaged, a marketing interviewer, that they had 120 tradie clients implementing this system. They earn annual revenue now of $8,000 per client, more than what they were charging that client for the preparation of annual accounts and tax returns. They still get that fee, but they've earned another $8,000. There's 120 clients. It's a fair bit of earnings, isn't it? Just under $1 million. So you can implement this system with the ESS BIZTOOLS Business Advisory Services Starter Package, which is a great package for you to start offering a broader range of professional services for your clients. So I really do recommend it. Have a good look at it. Now, we have a Black Friday special that's still available. It's running to the 6th of December. That's a great package, and it is a great incentive, I hope, to you and your colleagues to decide, yes, we're going to start with a starter package. Starter package normally costs $2,100 upfront cash payment for 12 months, including GST. We're offering a special 20% discount, brings it back to $1,680, but you'll notice there that's for 15 months subscription. And we have a quantity of holiday accommodation vouchers. They're going down, so there's some left. So we'll give you 2 of those for a holiday accommodation somewhere. That's 3 nights somewhere in Australia or in Asia that you can take advantage of. Or you might want to go into an advanced package. This is normally $6,500, including GST. After the 20% discount, it's $5,200, and you are getting 15 months access, and you're getting 4 of these holiday accommodation vouchers. That means you can have 12 nights accommodation, if only one person's taking it, or you can allocate it to 4 people. And some of our subscribers said they're going to give it to their social clubs to use as raffle prizes, or to go out and give it to the clients. It's up to you. Then we have the financial forecasting package. Now, this includes everything that's in the advanced package. And we then have the Plan Gurus software, the 3-in-1 financial forecast package that banks all over the world now require. So you get all that, including the software, for $7,920 and 4 of these holiday vouchers. And you also receive the Plan Guru software. Plan Guru normally gets sold in Australia on the basis that a subscriber can add 3 clients to the budgets, cash flow forecasts, projected balance sheets area. And if they want more, they've got to pay an extra $29 per month per client. We negotiated with Plan Guru to get access for 10 clients. And if you use the full 10, you would have a saving of about $3,400 per annum. That's worth thinking about. Plus, you also get trained, and your team gets trained in how to use Plan Guru. So it's well worth having a good look at this and getting on to Paul Barnaby, who's the chief trainer of the Plan Guru software. So if you want to know more, please visit our website, www.essbiztools.com.au. You can also book a 15-minute complimentary Zoom meeting with me where I'll take you through all aspects. I'll ask you a few questions like the size of your firm, the number of accountants you have employed, the number of bookkeepers. What do your current clients do? What sort of services are your clients telling you they'd like? And then I will make a proposal to you. This is what I think you should do. Start with the starter package probably, and then ultimately you can move your way up. And all of our products are all interrelated. You can also have a look at the system on ESS BizGrants that I mentioned before. You can go in there and get a 2-week trial for one of your clients so you can see how the system works, see how it identifies government grants. And if you're ready to subscribe now, that's wonderful. Get in now while we've still got those holiday vouchers available and before the 6th of December. So you can subscribe now. Just go to essbiztools.com.au for the www in front, of course, and click on subscriptions and the system will take you through. And you can pay and then leave your receipt and vouchers in our office, and there's normally someone down there, and we'll be underway. And you, within 24 hours, will get your passwords so you can make access to the ESS BizTools website to get the material. And there's my contact details again. Telephone 1-800-232-088. Visit www.essbiztools.com.au. And if you want to send me an email, please send it to me at peter@essbiztools.com.au. Upcoming webinars in this series where we've been celebrating Black Friday, but also tracing the 40-year history of Financial Management Research Centre, which 40 years ago was established at the University of New England in Armidale. The virtual CFO role, helping SMEs to succeed, is on the 30th of November and includes Andrew Geddes as the other keynote speaker, and assisting clients to get ready to raise capital. We're presenting that in association with the Plan Guru people. On Friday, we have the assisting clients to get ready to raise capital. This is on at 11:30 a.m. AEST, 12:30 p.m. AEDT. Incidentally, the Wednesday webinar with Andrew Geddes is also on at 11:30 a.m. AEST, 12:30 p.m. AEDT. If you need any other answers to questions, don't hesitate to send me an email, peter@essbiztools.com.au, or telephone me on 1800-232-088. Thank you for watching this webinar today as a live feed over social media, LinkedIn, Facebook, and YouTube. Or if you're watching this webinar at a time more suitable to you to watch these types of webinars, that's fantastic. If you've got any questions, please send me an email. Stay safe. Have a great day. Goodbye.